There's obviously products that just launched that are holding Bitcoin and Ethereum are going to be crypto index funds, which I know it's Bitcoin, not crypto for you, but like that's probably going to be another big area that we see come to light over the next year or so. I think we're going to see a bunch of these crypto index products.
So you think there'll be like the S&P 500 of just the crypto industry?
Yeah.
James Seyffart, ETF analyst, Bloomberg Intelligence, back on the show. You've become so popular in the Bitcoin space. How are you?
I'm good. Yeah, it's fun. This is the first time I'm doing your podcast in person. So.
I know. Well, people don't know this, but your partner lives in St. Louis, so we've got to hang out in person. So I consider James a friend.
Yes, we go out to dinner every once in a while. We need to do it again soon.
I know, very much. Yeah. Okay, so let's talk a little bit about the ETFs. A lot happening. I still can't believe that this was the most successful ETF launch of history. So talk to me a little bit about the market. Now we're a year in. Give me your take.
Yeah, I mean, my favorite chart of this is if like you just look at like the gold ETF asset growth over time, and everyone's like, the initial thing you think is like, did you inflation adjust the launch numbers? Did you do all this stuff? And honestly, even if you inflation adjust, no matter what you do, it doesn't matter. This blows away everything you can possibly look at. So if you look at the gold ETFs, for example, like there's a chart and it starts in 2004, they're at 130 billion in assets. Bitcoin ETFs, like not that long ago in January, peaked at around 122, 123 billion dollars in assets. So they were like only less than $15 billion away from catching gold ETFs, which started in 2004, obviously digital gold, what have you. But there's a lot of interest in the Bitcoin ETFs. I mean, IBIT is the fastest ETF to $50 billion. As an entire category, part of that growth is obviously the performance of Bitcoin since they launched. They launched when it was like low 40s, but they've taken in, there's been some outflows in recent weeks, but they've taken in about at a peak just over 40 billion since their launch. So they basically took in $40 billion in a year. They have 110 billion-ish dollars in assets, $100 billion in assets. Individual ETFs, IBIT is one of the most traded ETFs consistently on a regular basis. It reached 50 billion like in a record amount of time. They did it in a couple hundred days. The previous record was over 1,000 days. So like
wow.
All of the, no matter how you slice it, like they've broken every record that you can look at.
Okay, so when we talked last, we were discussing sort of a race between the different ETF issuers. How is that all playing out? Because obviously IBIT is the clear winner, but is it by a lot? Are there other competitors that are still going to remain strong, you think, over the years?
Yeah, I mean, even the smallest issuers have more than enough money to be profitable. Like, so a lot of people are like, there's 11 ETFs coming, 12 ETFs coming. Not all of them will be around in a year or 2 years. I mean, unless Bitcoin like drops 80% from here, those ETFs all of them will probably still be around because they're profitable. Once you get them out the door and you get to a certain level of assets, you charge an annual fee, as long as that fee that's coming in is offsetting the costs that are running the fund. And even in many cases, a lot of these issuers, even if it's not super profitable, they'll keep them. All of them are profitable as far as I can tell.
Wow.
So, but yeah, IBIT has run away with this. The one thing that IBIT has truly run away from is not just assets, but also liquidity. They're the dominant trading vehicle. That said, you still have plenty of products with tens of billions of dollars in them. You have FPTC from Fidelity. You have Grayscale's products, both GBTC and BTC, that are also doing really well. You have other issuers like ARK and 21 Shares, also Bitwise, even VanEck. Like everyone is pretty much doing well, no matter how you slice it. But IBIT obviously is the leader when you look at, no matter what metric you're looking at, particularly, so IBIT is dominant, right? But if you look at the options market, which is a relatively new thing to Bitcoin ETFs, we haven't talked about them yet.
Yeah.
IBIT is like 98% of the volume in open interest right now.
Really?
For Bitcoin ETF options.
Why is that if the others are doing well?
Well, in the trading world, it tends to be winner take most, not all necessarily. And when you're the most liquid one, you're going to get the most options, because if you're going to, enter into an options contract, you're probably going to do on the most liquid option, unless like maybe if you're holding a specific ETF and you want to protect against it, you might use the options contract on that ETF, but all the liquidity is in the IBIT options. So they've kind of won that as well. So we see this a lot in like S&P 500 ETFs. There's a whole bunch of ETFs that are S&P 500. Ironically, just recently, Vanguard's S&P 500 ETF is the first ETF to dethrone SPY, which was the first ETF ever. VU for a little while was actually bigger than SPY on assets, but it doesn't touch it on liquidity. It doesn't touch it in trading volume, and it's not even remotely worth talking about when it comes to options. So usually what ends up happening is the liquidity coalesces around one area. It's easier to take over market share in assets and flows theoretically, but trading volume, it's very hard to steal.
Coin Stories is brought to you by Genius Group, a Bitcoin treasury company listed on NYSE American, ticker GNS. Genius is on its way to hodling 1,000 Bitcoin in its treasury while educating the world on a Bitcoin-first future. Genius is also launching the Bitcoin Academy with courses from the likes of Seyffart, author of the Bitcoin Standard. Join the launch waitlist via the QR code on the screen or the link in my show notes and receive the weekly Bitcoin Treasury newsletter, plus a chance to win a whale pass to Bitcoin 2025 in Vegas this May. Genius Group. Genius isn't measured in IQ, it's measured in Bitcoin. Coin Stories is also brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and high-performance computing for AI. As a publicly traded leader, Bitdeer boasts a massive 2.5 gigawatts of electrical capacity and infrastructure across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Learn more at bitdeer.com. All right, back to the show. Can you shed light on who is really buying the ETFs? Is this still largely retail-driven?
Yeah. So if we look at the Bitcoin ETFs, you have to follow these things called 13Fs if you have a certain number of assets, if you meet different criteria, mostly think institutional type investors. And we know 25-ish% of the holders based on those 13F filings as of the end of 2024. The biggest holders, ironically enough, are hedge funds. But that's only 25%. So that other 75%, it could be high net worth individuals, who knows exactly would qualify, but largely it's still retail. But hedge funds do own like $10+ billion worth of these things. Some of it is, long-term holding. They're actually believers in Bitcoin, but a lot of it is they're just using it to trade. I've talked to multiple hedge funds that are doing this. A lot of it is this basis trade. So basically you short the futures contract, the CME Bitcoin futures contract. Again, that's in the TradFi rails to get Bitcoin exposure. That was the first way for traditional financial people to get exposure to Bitcoin. And usually there's a premium. So like if we're right now, let's say it's March and we go to where you're trading the March contract that ends at the end of March, that typically trades at a premium. So what you do is you sell it at a premium and then you go long the spot market and you earn that return. And you can just kind of keep doing that. And it's not completely risk-free, but it's basically risk-free because you're delta neutral. So your exposure, you're long the ETF, you're short the futures contract. So a lot of hedge funds love that. And particularly at times between from the election through the end of the year, that was a really juicy trade, double percentage point on an annualized basis. So what ends up happening is a lot of money pours in, because these hedge funds are like, all right, I'm selling forward the futures contracts because there's a persistent premium and I'm going to offset that with the ETFs. Why is that premium exist? I don't really know. The best answer I've gotten from different people is they think it's the offshore perps market. So those perps markets are even at a steeper premium than the CME futures market. So the people that are able to partake in those offshore markets where people are trading in the futures and perps, perpetual futures, they're okay using the CME futures because they have the same, contract end date, what have you. But again, by using them, they're creating a premium on the traditional financial rails. And then the spot ETFs and these hedge funds are taking advantage of that. That premium has declined a decent bit into 2025. So I think some of these flows we're seeing, a lot of it is worried about macro fears, a whole host of other things we can get into, crypto specific things, Bybit got hacked, all these different things we can talk about. But I think some of it is an unwinding of that basis trade that we've seen that we saw those outflows in February.
Okay. Yeah. I do want to talk about outflows, but first of all, just in terms of the ETFs, the institutional adoption, it seems like in the last 13F filings, we saw, I think we're over 1,500 or something, corporations and institutions are adopting this. If that wave continues, that's a huge amount of demand for Bitcoin, isn't it?
Yeah, so that would be the next big catalyst in my mind. So I mentioned hedge funds are the biggest holders. The next one is investment advisors. Now, keep in mind, some of these trading platforms fall under there, depending on exactly how they file their 13Fs. It's not the cleanest to try and figure out exactly who it is holding these things. But investment advisors are big buyers of these ETFs. Again, like I said, $10-ish billion are hedge funds. Investment advisors aren't that far behind. It's in the billions of dollars. If you look at different surveys, particularly 2 years ago or a year ago, the biggest concern was the regulatory concerns and no way to access, right? So they were concerned the SEC wasn't going to allow this. They don't like crypto. And they said, there's no ETF, so I'm not going to go to the crypto rails to get exposure. all right, regulatory concerns pretty much done with Hester Peirce's crypto task force. Trump is a pro-crypto president. We have the ETFs. There's a whole bunch of things happening with custody. SAB 121 is done. So all these concerns that we heard from advisors, that the people that I tend to talk to that deal with these advisors, the reasons why they weren't buying are gone. So I think like the pullback could bring more people in potentially into the ETFs. But again, BlackRock is now recommending a 2% allocation for different reasons. So there's a whole host of things that are happening. But these big wirehouses, think like the huge banks like UBS, Morgan Stanley, JP Morgan, Merrill Lynch, those types of people, they aren't allowing people to buy these things yet. I talked about this with you before on your podcast, but essentially they're solicited and unsolicited. And if you say you're my advisor and I go to you and I say, I want you to put 2% allocation to Bitcoin,
they can do it.
In most cases, they can do that and they can
recommend it.
But you're not allowed to come to me and say, I recommend it. There are some that are doing it. So like in your case, like Morgan Stanley and some others it's hard. It's also, they don't have to announce what they're allowing the advisors to do. Yeah. So it's kind of on reporters to figure out where they're at in this process. But like, if you have over $1 million in invested assets, you meet certain risk tolerance metrics and ability and desire to take risks, then you can recommend it to your client. And that's kind of where we're going right now. But eventually, theoretically, if the Bitcoin thesis plays out, at some point, more and more of these huge institutions with tens, hundreds of billions of dollars are going to potentially start recommending these Bitcoin ETFs as a satellite portion of their portfolio. Think 2%, 5%, what have you.
That would be huge. When you talked about that hedge fund trade, could that be suppressing Bitcoin's price at all?
Not really. So I'm actually having a debate with a bunch of people in the crypto world on like Telegram chats and different things along those lines. I mean, really, it's delta neutral, right? Because it's basically like it's an arbitrage trade in a way. It's a time arbitrage because again, the contract doesn't expire till the end of the month and you're holding spot now. So theoretically, the way futures contracts work is if you're shorting it, you have to deliver the Bitcoin at the end of the month or just deliver the dollar amount. And in order to do that, you just buy the Bitcoin now and be like, I signed a contract that I'm going to deliver you one Bitcoin. I sold it to you for say 100,000. Right now it's trading at 90. I buy at 90. That $10,000 premium I automatically get, right? It's not that extreme. I'm just using examples. So what's really happening is you're selling in one market and buying in another, and delta neutral, that should be, minimal, zero to minimal impact on price. The flip side is like there's implied leverage in futures contracts. You don't need to put up the full 100K for a one Bitcoin futures contract. Theoretically, you could do with less. So maybe there's some way that theoretically the unwinding of the basis trade could be hurting price slightly, but that would mean the flip side, as the basis trade is getting wound up, it would be positive for price, right? So no matter how you slice it, either it's delta neutral or the building of the basis trade is good for Bitcoin and the unwinding is slightly bad. I'm still of the opinion that the basis trade is a delta neutral exposure. Now, maybe if it's unwinding and flows are coming out of the ETFs, that could create negative sentiment and vice versa. I could see that argument, but yeah, it's delta neutral. It shouldn't really be impacting price in some massive way if people are opening up a basis trade.
Got it. How volatile are the spot Bitcoin ETFs compared to other ETFs?
They're very volatile. Well, you got to realize there are ETFs that are 3x the NASDAQ 100, right?
Right.
And there's leveraged junior gold miner ETFs, and we have leveraged MicroStrategy ETFs with some of the most, I can't speak, some of the most volatile products in the market. So in the grand scheme of things, as far as like rated R goes, they're not that volatile. But obviously, compared to something like Bitcoin or the S&P 500 or things along those lines, they are more volatile. So, but people are used to this in the ETF wrapper. Like one thing that I would point out, like the MicroStrategy ETFs, ironically enough, strategy. Yes, you're right. There's still MSTR and MSTZ and these things. But so there's 2x long and 2x short ETFs out there right now. A lot of people like to trade those things. All I'm going to say to any of your listeners, if you're using those things, be aware that you are playing with the power tool. So one thing that's unique about leverage products is they are only going to give you the return on a day-to-day basis. So like from the start of the day to the end of the day, they're going to give you 2x the return of MicroStrategy or Bitcoin or Ethereum or what have you. But that doesn't necessarily tie out over the long term due to the way that volatility and resetting works. So right now, the 2x long MicroStrategy ETF and the 2x short MicroStrategy ETF year to date, basically through the end of February, are both down, which like breaks a lot of people's brains. But like So ETF investors, a lot of people, like, they know these things. They understand Bitcoin's volatile. And I think anyone getting into Bitcoin, like, they understand there's been many 70, 80% pullbacks. 30 to 20% pullbacks are pretty normal. So I think people, like, they know what they're getting themselves into, as far as I'm concerned.
This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful multi-key vaults. And now Casa is here to help businesses and governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed specifically for small businesses with team signing capabilities and a web dashboard. Regardless of the size of your business, start your Bitcoin treasury the secure way. Take control and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. Next up, Speed, the fastest growing Lightning wallet in the world and my preferred way to send and receive sats. You can use Speed to buy Bitcoin, swap with stablecoins like Tether, and snag gift cards to earn rewards, all in seconds. Download Speed via the QR code or the link in my show notes. Use code COINSTORIES10 for 5,000 free sats. Are you ready to take control of your wealth, your Bitcoin, and your online privacy? The Bitcoin Way is here to empower you. Learn to take full self-custody and eliminate all counterparty risk. Learn how to set up and run your own node, and upgrade your cybersecurity and build a fortress of privacy around your online activities and your Bitcoin. The Bitcoin Way specializes in personalized one-on-one training. Schedule your free consultation at thebitcoinway.com/Natalie. And finally, Coinkite, the one-stop shop for all your Bitcoin self-custody needs. Their flagship cold card wallet is the go-to for cold storage. Protect your Bitcoin like a pro. Visit their site and grab 5% off with promo code COINSTORIES. All right, back to the show. I don't think we've talked about strategy. I mean, I know you look at the ETFs, but I just find what they've done to be fascinating. Michael Saylor kind of pioneering the playbook, and his stock outperformed everything in the NASDAQ. I mean, what are your thoughts on that?
Yeah. So when I wrote a note, one of my most read notes of 2024 was basically when I called for MicroStrategy to be added to the NASDAQ.
Oh, yeah.
So that was one of my most read notes of 2024. What he's done is absolutely fascinating. I mean, it's been rough 2025 if you are a strategy stockholder. But the playbook that he's outlined, and he just lays it out for everyone else to follow. It's been fascinating. I don't like specifically cover the stock. I cover it from the perspective of the ETFs. Getting added to the NASDAQ is big. I will cover it as they, potentially try to get added to the S&P 500, things along those lines. But I would never, try to say that I'm an expert on all the things that are going on with the options market and MicroStrategy and the convertible debt. It's just fascinating to watch. I kind of think there's, what he does is he always talks about, like stepping up or stepping down your exposure to Bitcoin and like almost like voltage or electricity.
Yes.
There are a lot of ETFs coming to market in the Bitcoin world that are kind of doing a similar thing. So there's buffer products where you're protected against 100% of the downside that launched in January. And if you bought one of those things in January, you're sitting pretty right now because you're basically not going to be down. And you still have exposure to Bitcoin. Obviously, it's capped to a certain point. So you're giving up certain things. So you get protection on the downside, but you get capped upside. There's other products where you have like 10% protection to the downside, but you only get 80% of the upside. So there's all these things coming to market that are basically trying to deliver to advisors what strategy tries to give to, their bondholders, their equity holders, the preferred stockholders, but you name it. There's a lot of people that are going to commoditize that in the ETF wrapper as well.
Has this made you more bullish on Bitcoin?
What?
Just the ETF success and following this whole space.
Yeah. I mean, I'm somebody that's like, I've been interested in the space going back to 2017. I mean, I was writing notes about the Grayscale Bitcoin Trust back in 2017. And I tweeted about this the other day, but I created what the original ethos of the Bloomberg Galaxy Crypto Index. So because basically in 2017, there was no real indices out there. We were just trying to figure out a way to like gauge what's going on in the market. So I was very early covering this space. I've always been a relative believer in Bitcoin and what they were trying to do. The way I always described it to people in 2017 through like even till now, I viewed it as a call option, a store value asset. My boss, Eric Balchunas, says that like that's too specific. So he says it's like gold as a teenager, potentially. It's like very volatile. It could grow up to be like, a store value asset and more, obviously there's a lot of different things that people are talking about Bitcoin could be. But yeah, I just always viewed it as something that if it really gains the potential that a lot of people are trying to push it towards, it's a call option in the sense that it has massive upside, and the downside is it just goes to zero. And I kind of view in recent years what's happened with Trump, what's happened, with the ETFs in general. I think we've kind of chopped off that idea that it could go to zero. I don't want to say that for sure, but like as far as I'm concerned, and the way I look at it, I don't think that's a real risk in the way I thought it was a risk in say 2017, 2018.
Mhm. Are there ETFs that combine Bitcoin with, say, gold or bonds or something?
There are. So they're called return stacking ETFs or 1+1 ETFs. They'll use derivatives to get exposure. So I mentioned before how like to get full exposure to Bitcoin, you don't need to put up, like if you wanted one Bitcoin, you don't have to put up one Bitcoin's worth of dollars. So let's say Bitcoin's trading at 100K, you could put up a much lower number because of the way that futures work. And what they do in these return stacking portfolios is say like they'll do the same thing for the S&P 500. And then you have full exposure to the S&P 500 via futures. And then the money that they didn't need to use to get that full exposure, they'll also put into Bitcoin futures. So basically for a dollar amount of exposure, you're getting way more than that exposure to something like the S&P 500 in Bitcoin or gold and Bitcoin or bonds in Bitcoin and you name it. So there's a bunch of products like that. And then there's obviously products that just launched that are holding Bitcoin and Ethereum are going to be crypto index funds, which I know it's Bitcoin, not crypto for you, but like that's probably going to be another big area that we see come to light over the next year or so. I think we're going to see a bunch of these crypto index products.
So you think there'll be like the S&P 500 of just the crypto industry?
Yeah, pretty much.
It's crazy to me.
Yeah.
They're so volatile. And so many of them, like you look at the charts, and this goes to the Bitcoin dominance that people are really recognizing lately. So many of them, they're great one year and then they drop off and they're dead.
Yeah.
So how can you'd have to interchange the index far faster than you would with the S&P 500.
Yeah. So it's there. A lot of them are like the Bloomberg Galaxy Crypto Index. I think there's like 10 coins in there. Grayscale has a digital large cap index, which only has like, I think 6 tokens in it.
Yeah, you couldn't have many more.
And then Bitwise has one that has like 10 or 12. CoinDesk has the CoinDesk 20. So, but the other thing you gotta realize is almost all of these are market cap weighted, which right now is 90% Bitcoin and Ethereum, right? It's 70+% Bitcoin, 10, 15% Ethereum, and then the other like whatever tokens are in there make up the rest. The only caveat I would say is like the way I view Bitcoin is like, digital gold, the digital store of asset, you name it. And some of these other products are much more akin to technology. Like I really do think there is some of the blockchain technology and some of these chains are going to build the back end infrastructure for what TradFi currently does. So there's all these things that happen in the back end when you buy a stock or a bond with settlement and transfer agents that like 99% of people don't pay attention to any of that. Mm-hmm. And I think some of the technology and some of these different blockchain tokens could take advantage of that. Whether or not it will be remotely close to the opportunity that Bitcoin has in front of it is a different discussion to have completely. So I think there is an argument to be had that maybe it's if you want a diversified exposure, particularly for somebody who's an advisor, they're going to like the idea of one, I'm getting exposure to Bitcoin, and in one trade, I'm also getting exposure to these other things that could potentially become something down the line. But as you said, it's really been nothing but Bitcoin for the most part, aside from maybe Ethereum, but Ethereum's had a real rough go of it since the middle of 2024.
Very, very true. What do you think people should be paying attention to?
I mean, the next big wave of adoption is kind of what we've already talked about. Corporations possibly buying this. Obviously, nations and states potentially adding this to their balance sheet is another big thing. But for the ETF side of things, it's really those wirehouses, those advisors. They control trillions of dollars of assets. Right. Like they're the people that manage the money of the really wealthy people, right? So these advisors, these wirehouses, these brokers, they control the money of the centimillionaires, billionaires, you name it. And they are like potentially the next wave of adoption for these Bitcoin ETFs. The ETFs had an absolutely unbelievable first year. I mean, we were at Bloomberg, we're pretty bullish. We were more bullish than pretty much any other traditional financial research arm. Mm-hmm. Not quite as bullish as some of the, the real true Bitcoin believers and bulls. But they even blew us out of the water with what they've done. So, I mean, even if they do half as well as they did in 2024, going through the end of 2025, it'll be continued success. And I think the next leg of that growth is likely to be those wirehouses, those advisors, platforms adding this as a satellite portion of their portfolio.
Yeah, I just talked about this with Matt Hogan from Bitwise. It's so surprising to me that these massive wealth advisors, they can't recommend it. And they might invest in Bitcoin themselves,
A lot of them
but
do.
until a client comes to them, they won't recommend it. And that's wild to me. That has to change.
Yeah. I mean, I've gone to conferences specifically to talk about these ETFs and how I see them being used. And a lot, honestly, like I talk about the ETFs, what they do, we get into the mechanics, the like things like that. But most of the questions that come from these advisors is like, how do you see this competing with the dollar? Like, how do you see this in a portfolio? It's like, it's not really questions about the ETFs. It's more asking questions about Bitcoin itself. So I think advisors are still trying to wrap their heads around all of this stuff. So in the early days of ETFs, even before I got there, but for a while, I've been doing this for over 10 years now. It's a lot of education. So these advisors, they're relatively smart people. Like in most cases, some of them are basically salespeople for the most part, but there are a lot of advisors who manage money for different people who are extremely intelligent. They want to make sure they wrap their heads around it before they put money into this thing. And honestly, I really do think a lot of them are like, okay, if we see a pullback, I'm going to put, some of my clients' money into this stuff. But all the advisors that were registered independent investment advisors that put money in early years ago are now people like on the Bitcoin circuit talking about how they put their clients 5% of their clients' money into Bitcoin in 2020, and now their clients love them. They're getting more people. So it honestly was a marketing tactic, and that was a risk, right? At that time, doing that I think was a big risk to go out and put a bunch of your clients' money into Bitcoin. If it didn't work out, it wasn't going to look good. But I think we're starting to get to a point where like everyone kinds of needs to have an opinion and ability to talk about it. And it might be more of a risk to not even be able to have a discussion about it. Like if you're a younger person, you go to an advisor and you hold some digital assets, whether it's Bitcoin or some other version of crypto, and you're trying to get an advisor who knows nothing about Bitcoin or crypto, like that's going to be a bad look. It's going to be a hard sell to bring them on as a client.
Yeah, it's true.
So I think it's kind of changing from a huge risk to do it and take it and big benefits to you actually need to know what you're talking about now.
That's so true. That's a good place to end it. James, always great to talk to you. I know you have so many fans again in the Bitcoin space. Thanks for joining me. Any final thoughts?
No, that's it. Thank you for having me, Natalie. This was fun.
Cool. I'll link your work and check out James' profile.
Thanks.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. If you can, turn on those notifications and leave us a positive review. It really helps the show grow organically with new listeners. We have a free weekly newsletter. You can sign up at thenewsblock.substack.com. And remember, this show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.